707 contracts.
All right, good morning in YouTube land. Let me know if you can hear me, please. Anybody out there? Thank you, Mr. Thomas. All right, we'll be back in a minute after the disclaimer stuff. If I can find it.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and host Apple Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade with an edge for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and could potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades whether you want to go long or short. You have the ability to copy the spreadsheet and enter in your own values and use mine to confirm the zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alright, good morning. Markets are going crazy to the upside. Got some new stuff to show you guys as well. Alright, so a couple things I'm working here. I'm about to enter a gold short potentially. This is an Izzy. So I have important areas that I chart or keep track of, and then I look for the real-time stop iceberg events. This is sell ice into my important area. That's my trigger for the trade. And this is where this market opened yesterday after the whopping gap down and continued. Right, so we gap down, open there, and continue down. And this is what you call directional conviction. That's the definition of directional conviction. This whole thing is directional conviction. Gaps are included in that. But anyway, this is where it actually opened. Came back here in this zone that other things have happened. Directional conviction there, gap up there, and it's pretty much the top of that balance. Anyway, we're back here. Volume event.
S&P Iceberg sell ES 700 contracts.
So I will go short that. I think it was a options level, so we're using another option service as well that gives us levels on all of these other futures products. So I use Spot Gamma. That was still is my main source, but this Mentor Q, I'll go over that, gives you options levels for all these other products, which are very important. You'll watch the reaction to these levels. It's updated daily, and you bring them in here, and we have a new trade, an auto fade trade when these markets hit these levels, and you get your stop iceberg events. So just like anything I trade, I demand an iceberg or a SI event, stops or icebergs, and we have rules, and it draws these zones, and we have rules around these zones, and take the trades, right? But I need to see the real-time volume activity to be taking these trades. Again, yes, these areas work without most traders are trading these areas without this information, right? Whatever they're looking at, and yeah, it would work some of the time. And if you have an edge, it works more often than not. But you will enhance your areas incredibly multiples if you use this information, because it's what's happening real time. You can see what big money's doing, what the dumb money's doing. So the big money is usually what we call paper. They have to hide their orders, and because if they put it in the order book, these algos run the market away from it. So they only have to flash a portion of their order in the DOM depth of market order book, and then as it fills into it, or as it trades into it, then the rest of the orders are exposed or filled, and that's why they call them icebergs. So very important information to know where the big money is playing, and important information to know where the dumb money is playing, meaning the dumb money pukes, stop runs. So there's something going on with my drawing tool on ES. It's the only product I can't adjust here, but there's some sell ice here. There's some sell ice down here as well. So, as far as levels, these are all-time highs. So, not, for me to short this, there's nothing for my Izzy zones because we've never been up here. As far as my Ludwig levels, which are the second most powerful thing I've ever seen in trading, next to the SI indicator, we're not at anything there either. So the only thing that I can possibly short here is if we're at a important level, and you can see right there. So I should already be in this trade. This is the new trade. So I'm going to short this. This is already. So of course I missed it, right? So we've added a couple trades, and this is I'm going to have a course out here very soon with all these trading strategies.
CL disqualified.
But it is going to be like a continuing education. So every time I add a new one, you'll have, once the course comes out and you have the course, you'll get the new strategy as I put it in. So, you get these as part of my trade room as well. But this is this is the newest trade here. Call it Sexy Gexy, and the initials are SG, so that's good for spot gamma. But again, I'm using Mentor Q as well. Take any fade trade into a spot gamma or Mentor Q gamma level. A lot of times they're the same ones, right? Because they're monitoring these large options positions that these dealers have to hedge. That's why there's such incredible levels where you get instant reactions many times, because there's no question mark whether the dealers have to hedge into these areas, right? So this is the one that I'm looking at. So basically right there. So the dealers are going to come in. The dealers are not the only game in town, so there's going to be days, the dealers are hedging and they're selling here into those levels, but there's a bigger force in the market that continues to push it higher. So they're still incredible. I mean, I'd say 80%, probably more than 80% of the time, the dealers are the main game in town, but there's going to be days like the other day we took a couple in NQ and I got run over on them. And the best way to judge if the big money is in the market is to monitor the relative volume, right? So I'm using the relative volume on Sierra chart, which is telling me the exact volume for this 5-minute time period over the last 30 days. So I know exactly, if it's spiking at this time period, I know it's way more than usual, and 200% it'll start to color yellow. So anyway, the other day when I took the Sexy Gexies, I got run over on like 2 or 3 of the levels. The relative volume was spiking incredibly. So. Anyway, I would have taken this. I guess I could still take this, but you did get an instant reaction. I'll give this one more shot. Sorry for the cough there. I'm not thrilled about shorting these markets, but
order filled.
This is a level, so I'll give that a shot. If it had come down to the ATR here, so these are more instant reaction trades, right? So all my 95% of my trades,
U.S. Gulf oil shut-ins ahead of the storm.
95% of my trading strategies are, we have rules where we're waiting for an ATR out of the zone. I have 2 auto fade strategies, meaning the second you get to this isn't a level, we'll go over this trade, but once you get to this level, aka this level, right, you got two different levels here, options levels. The minute you hear either an opposing event, meaning sell stops, sell ice as you move into the area, or buy stops, which are usually just retail trader pukes that are quick rejections, you take the trade the minute you hear the event. Like I said, 95% of my entries are waiting. I demand the market to move at least an ATR out of the zone to show me what's the best chance of it working, right? And again, right when I've been using this thing for 8 years now, this SI indicator, right, the subchart, which is just these zones drawn up based on this stuff. But used it for 8 years, and I've learned by trial and error. I used to jump in all of my areas right away, and I learned the hard way that's not the best way to trade them. The best way to trade them is to wait for a move out. And I know it's, you know, goes against all the educators out there saying, you know, you shouldn't wait for confirmation for areas. It ruins your R values, R percentages, so on and so forth. Meaning, you know, when you put on a trade, you want to be trying to get at least 1-to-1, right? It's not very good drawing, but most traders look for 2-to-1, 3-to-1. And yeah, I agree, but you know, I'm willing to sacrifice that R to make sure the trade is a better trade. But we do have auto fades now, which are really incredible R trades, right? So I got in here. I would, for this Sexy Gexy, I would normally wait for this to be tagged. You know, that's another 5 points down. So I'm here. So I'm using my traditional stop. So I shorted the Sexy Gexy with my stop at 93.25. So I'm only risking about 5 points now versus waiting for this to tag this and then getting in. So again, 95%, I'm waiting for that traditional move out of the zone, but for this trade, I'm willing to take it because I know these dealers react at these areas, right? So that's the new trade. We'll go over a couple of these other ones too. We had a new reversion trade where we're taking back doors as it's coming back. We got two different types of trades in here, right? So we have position trades and we have reversion trades where we're playing for a move back to the zone, kind of like Mr. Crude here. So the propensity for these markets to come back to these zones is ridiculously consistent, right? Right back to the zone. So we have this is part of the zone drawing tool. I'll put this document in where you get access to everything I'm using. But anyway, these are the ATRs, these dashed or these dotted lines, and then these are the stops for the ATR trade. So the idea is that, you know, the propensity for these things to come back to these zones is insane. So we take advantage of that. It's more of a scalp trade. So we have two different types of trades. One of our trades, we're taking position trades off these areas where we're looking for bigger moves, and then if you're more of a scalper mentality, you can take these reversions, and then you're out back at the zone, right? So that's what the zone drawer is showing you. So it will draw the event. So for instance, this drew this sell stop event here. And there was another little one after that. I didn't actually merge those. I should have. Let's see what that looks like. I missed this long, and I've already been out of some. I'll go over that here in a second. But let's see here. That looks like that came down to here. So the great thing about these is you can adjust them. So that's where that spike came in there, like that. So that's the zone. So this is actually the first retest of this zone. So I have trades for this as well when it comes back to the area and then starts to move back out. So I have some conditions on that. It's called the bark and the lick trade. So bark is basically trading any volume event that happens, waiting for an ATR, at least an ATR, and that's that blue line. That's a 5-minute ATR. At least that amount comes back. As it moves back out, you go long. And then I have the lick trade that needs the ATR retest as well, and that's just literally you're trading for the liquidity. So if I were to put on the bark and lick here, the lick trade, I would not get out of any of them until it tagged that liquidity. That's just part of the trade. But for those two trades, I have a filter, and I need, this is called algo guy. This is exponential moving average, right? So I need this in, meaning the blue is the shorter term exponential moving average ribbon. So these are just different time periods, the shorter time periods, and these are the longer time periods, the red. So when the blue is above the red, it's bullish. When it's below the red, it's bearish. So I use this as my filter for barks and licks just to make them a higher percentage trade because they're very active. They're all over the place. And again, I'm not taking I don't require an important area to take these trades, right? Meaning I'll take them wherever these fire off just because I know the edge is inherent in these volume events. I want to take advantage of it, but I need algo in my direction. So you saw algo guy is bearish. So barks and licks for me off of this event are off the table. I did miss a trade here earlier, of course. This market moved down into this Izzy zone. So this is the inflection zone. We had the stop run. Could have went long there, and I would have been out of half.
150 contracts.
Sorry, I got this turned down too low. I can't hear what's going on. So these are the areas that I get out. We'll cover that too as we put on trades here, hopefully. But you can see this thing bounced right off the yellow lug. I would have been on half the trade. right there to the tick, which is also confluent with daily value area high, which is daily value area is just one standard deviation away from VWAP. So anyway, I would have been out of half. So you may be saying, well, why don't you go long now because you missed it before? Well, if I miss a trade, first of all, I don't chase trades, right? If I miss it, like I literally I ran downstairs, I came back up, and I had missed this trade, and the market was like, here. I'm like, well, I'm not chasing it. I put my order in, it never filled me. It came down, and the order actually was right here. It never filled me, of course, and I would have caught it. But the point is, if I'm going to get out of some, which I would have at the yellow look, I don't put the trade back on when it comes back because I would have been out of some already. So I just missed that trade. I got to deal with it, and there's another volume event right around the corner, as I always say. So hold on, I may be canceling this gold trade. So guys, this is exactly why I wait for the market to push out an ATR. So you saw that inflection zone. This is a very, very important level for gold, at least shorter term. Crap, I just X'd out of this, I think. Hold on here. This is my life story here with this Thinkorswim. Here's what I'm talking about. All right, there it is. So anyway, if you're just staring at a bar chart, this is an absolute awesome short area, right? If I don't have any other information, this is where this started when it opened the other day. So again, I knew that. Did you see me short? No. There was even sell ice here. I didn't just jump in because I want this market to prove that it is bearish off of this event, aka get an ATR out of the zone. That didn't happen. It's actually a bullish event now because it tagged the ATR above, but I never put that short on. So this is what I mean by not just jumping in. I know this was a very important area. I saw sell ice. Most guys would be like, oh, I'm in. I wait for that because I don't want that to happen. Now this is actually a bullish event. So now there's potential trades I can take off of this. So namely bark and lick. See if Algo guy is bullish. So now if we got the ATR, this retest confirms I'm going to go long bark and lick, and you can see all this liquidity up there. What is that? The resting orders in the order book is just displayed on the heat map, right? So, traders that don't know what they're looking at would be like, oh, I want to go short. Look at all these orders up here that want to sell. I want to go short. It's the exact opposite. These are magnets for the market to get to, and I know firsthand because it's the game I used to play all day, every day in the mini S&P. I would load up the order book with my offers, and then I would start buying, test the waters, and as it got closer to my orders, I would just step on the gas. Everyone would jump on my coattails because it saw all this activity buying, and then it would just run right into my orders. I'm out of the trade, and then the rest of the markets, the retail traders are left holding the bag when the buying was just me pushing it into my orders. See what I'm saying? So that was the game I would play all day, every day. Back then, you can spoof. There was nothing illegal about spoofing, so I was basically a market manipulator. These days, I don't really like it. I don't like that it's being done to me because I'm not I'm not trading 3,000 mini S&Ps anymore like I used to. But it's, I was hated on the street because I would play this game all day long. But the moral of the story is, if you understand the games, you know what to expect.
10:30 a.m. Eastern
Right? So
time.
this is the game. It's still being played to this day. And
this
this entity wants to get filled. They're not afraid of being filled, meaning they want the market to come up here because if something comes out bullish, it's going to blow right through here, right? They're not worried about getting filled. That's how you know they want the fill, meaning the market will get here to their magnet orders. So, every morning you should bring up whatever markets you're looking at. And I'll actually show you some stocks too. It's the same stuff, but try to figure out where the majority of the liquidity is. Some days the liquidity is on both sides, like gold. There's more above than below. So I would say we come up with a thesis on different things. Just liquidity alone, I would say this market's going higher, at least for now. I mean, that's not some great call at this point, but if you would have brought this up at the beginning of the day, you could have seen. There's just basically one big band of liquidity here. I mean, there was a little bit here, but there's more up here. When you see them on both sides, it probably is going to mean it's going to be more of a range day as well. All right, let me see what I'm doing here in ES. All right, so I put on that Sexy Gexy. So again, I missed it initially. I will watch. So this has already reacted basically. So the whole idea of the trade is you're getting in right when you hear the event, the sell ice event. You want to see a reaction from these dealers. Well, this did react a little bit. I mean, this is actually a huge down move for the last couple days. I'm going to hold it, but these aren't meant to if you're going to take this trade, I would probably get out a half at 1 ATR or 2 ATR and then try to let the rest ride. But again, it's just playing for a reaction into these important
That you to
levels.
explore new financial tools as
So,
Trump adds pressure
Didn't
to
quite
act.
get there, but these are areas, zones. They're not exact prices many times. So, and you can see spot gamma actually had one a little lower here. So, anyway, the other stuff we look at from the options perspective, and this is just getting more and more important, right? So, options. If you ever watch Brentford spot gamma, his when he breaks down like how much the options have exploded over the last 2-3 years with the zero date to expiration stuff, it's one of the main drivers in the market. So it behooves you to understand what's happening there, to understand where the movement's coming from. Like you'll be just sitting here and then the market will just rip off the page. You're like, what the hell was that? Was that a news story? And then you go over and you look at the zero date to expiration stuff, and you see they're just playing games with the options. So very important to understand that. And on the spot gamma hero stuff, you can see you can take off the longer term stuff and just watch the games in the zero date to expiration. So you can see that's actually moving lower right now. But this is telling you something too. So we talk about this. Brent from Spot Gamma talked about this on his webinar because I pointed out what I saw one time when I was meeting with them as I was learning this stuff. So you can see their zero date to expiration has moved down pretty decent. But you see the market's just kind of spinning in place. So dealers are shorting here. So when it hit that level that we just talked about, these dealers did start shorting this market. Well, I mean, it's not necessarily dealers. It could be speculators too. But the point is this moved lower. I mean, this is not a huge notional move. But the point is, if you see this going this way and this just spinning in place, that's a divergence. So what do you think is going to happen when this actually turns back up? Market's probably going to rip off the page again. So it behooves you to understand how this stuff works to just give you a better chance to compete in these markets. Hold on here, I want to put on the whole trades too. And then you can also break it down to puts and calls too, so you can see what's driving that. I don't know why this isn't working. Hold on. Alright, this looks different than it just did. So I may not have had that refresh. I did refresh it earlier, but it didn't. So that was the wrong, looks like that was the wrong hero. So just forget about what I just talked about it, the divergence, because this is the newest one. So that it just was not updating for some reason. But anyway, you can take off the alt trades. You can, meaning the longer term, or you can just put on zero date to expiration or turn that off, use the alt trades, and then you can break it down by puts and calls. So you see they're buying calls here. Puts are, kind of hanging, flatlining. So call buying usually means you get these continuation of the move. So just, something to keep an eye on. I'm still learning this stuff as well. But these guys, they're such major players. That's why I'm starting to put trading strategies just based on this action, because it's just so important nowadays, right? All right, so that's not saying much. And then you got the trace as well. This doesn't update as fast, but you can see
at 10:30
these
a.m.
areas.
Eastern time, get a
Blue is
weekly
support.
EIA
So say the market,
natural gas
something
change
came out, the
forecast
market
build of
ripped down
67
here.
BCF
Well,
on the
all
prior build
these
of
options
78
dealers,
BCF.
based on the color blue, it gets darker and darker. They need to hedge down there as far as buying. So you can use this stuff. I mean, a lot of times you'll have and this is showing the zero date to expiration stuff too. So there's ways you can use this. If it comes down here, say you had a bunch of levels and you see that, so you will get support, but you can use that as support and you can use it as magnets, right? So you look here, these are the two biggest options areas on the board. Very likely this market's going to get there. And then when it gets there, then it acts as resistance, because these dealers that are long, they have to sell, to hedge, so on and so forth. So, go on. I don't pretend to be an options expert. Go on Brent Spot Gamma's webinars and Mentor Mentor Q. Sorry, I keep saying Mentor NQ. So let's just go over this stuff real quick, because I put some stuff in here. So let me post this in YouTube. You guys, this is what I'm using. And if you guys got questions, throw them in YouTube, please. Alright, so we'll go over all this stuff, but this is the zone drawing tool. You get access to that. You can get the basic or the pro. The pro shows you those ATR reversion trades areas. And then this is what I put in today. So this is mentor Q. That's these levels here, which you can get for all the major. What's great about this is you can bring in or take off. Like I have the SPX, the SPY. I don't know why the SPY actually didn't load, but you can see here, like on NASDAQ, I've got QQQ, NDX, and then the NASDAQ futures here too. So you can see this is bouncing off this level. I did not get a sexy Gexy trading event up here, or I would have taken it. Right, but this is what I'm referring to when it, you know, I don't care what area it is, I don't take them blindly. I would need a volume event, but you can imagine how powerful these are as resistance as this market moves into these areas. And then you get a volume event that's real time. You can imagine the edge that gives you, right? So that's what I would have been looking for there. I didn't get an event there. It did react. I don't short it unless I get the event. So we have a guy, one of the traders in my trade room. He's been in there for years. He actually introduced me. His name's Jordan. He introduced me. He just did a webinar for us the other day too. He introduced me to this, and he takes them blindly, right? Which is fine. You guys, you do whatever you want. It's your money, but I demand a volume event in any area that I'm looking at, and that includes the Ludwig levels, right? I watch Ludwig levels, work all day long at these areas, and there's not always a volume event, but I still demand a volume event because it's something real time. Right, so that's how I trade, and it's just the best edge. So, for instance, this is an area here. Did I X out of this volume event? What happened to that volume event? Oh, that was right here. I think I accidentally X out of it. We had that sell it. Yeah, it was right here. So now I got to manually draw this back in. I don't know how I did that, but let's draw it because I may want to take a long here if it comes back. Let's see. So I teach this in my course too. So before we had this incredible zone drawing tool, I had to draw these by hand. If you watch any of my webinars for the last 8 years, Bookmap, I would have to draw these manually using this edit tool. You got to go into edit, horizontal line, you got to color. It was just a huge pain in the ass. So now at least we can have a zone drawing tool, gives you all the values and stuff. But sometimes you do have to draw manually like I did because I just somehow X'd out of it. But you can see that came in there, right? So I would have started that zone there, but it's continued to spike lower. So you can see the market, someone's buying these bubbles are market orders. Someone's buying it, ran into sell ice. Buying it, ran into sell ice. Buying it, ran into sell ice. They keep buying, they push it a little higher, and there's more sell ice coming in. See that little spike there, right? So I would, where'd that go? Yeah, so this level right here, see where that spiked? So I'll bring that up there. That looks, the bottom doesn't look correct though, is the issue here. Let's see. It's just good to see how you draw these. So I'd make the bottom there for right now. So I would have that, and I think it was wider, but that looks correct. So this, yeah, this tagged the ATR, but it has never come back. So remember I was saying I would take Barks and Licks, but off of this event, I would not take Barks and Licks anyway because I try my best not to take trades into the Ludwig levels because they're so powerful. So if I got an event right now, I would potentially short this, right? So
build 69
this is an
BCF,
important area.
build 69 BCF, higher than the expected build of 68 BCF.
That's the natural gas number just came out. I would short it, but you see I'm not taking a short because I need a volume event. So we'll keep an eye on that. But you can see it's starting to get up to this liquidity just like we thought because that's what goes on all day, every day. All right, so there's just nothing happening as usual when I get on these webinars lately. Markets are just whipsawing back and forth, Algoville. So just wait, just sit and wait. Like you don't force trade, you just sit here like a sniper waiting for your volume event in an important area, then you put on your trade. Let's see if you guys got any questions. Discord stream is not working. Hold on, sorry guys. I went over there and started it up. Let's see.
CS long entered.
Sorry about that. Let's try it again. I gotta restart this. Sorry, I just saw that right now. Share my screen. Alright, you should be able to see it now, I hope. If not, let me know. Oh, someone else. Sorry, Dan from Bookmap. I just saw your messages now, so sorry about that. All right, you should have it now. Nikos, hi. Can you please say how to use relative volume and the setup you have? So I don't use relative volume to put on trades per se. I don't have a strategy for relative volume. I watch it to avoid different strategies, right? So we talk about the reversion trade.
S&P Iceberg sell ES 700 contracts.
All right, we got more sell ice here. I'll come back to that in a second. Let's see what's going on here. All right, so there's one or two things here you can do. You can make this all one area because someone keeps coming in here selling this thing. You could even include that. It's probably the best option. But, this was a good 15, 20 minutes apart. So I'm just going to trade that independently. And again, this isn't, I may take another sexy gexy here off this new level. Let's see where we're at. Yeah, I'll give it a shot. I mean, again, this is the newest trade, but I'm willing to get in here. It's such a good risk reward trade. I'm willing to give it a shot. Just a quick short here. So
Order filled.
Could sell a couple there.
Order filled.
All right, so for this, I'm getting in right smack dab in the middle of the zone. It's back. It's another move into that Mentor Q options level, right? So the whole idea is to hope these dealers are. There's no hoping. They are hedging here. You just got to hope that the bigger money isn't going to push this right now, and you're going to get a reaction. So anyway, my stop is still my traditional stop. I forced the stop to be outside of an ATR, so it's going to be at 96. And then, but instead, like if I'm trading a normal area here, this was a shorting area, I wouldn't be short till it pushed out of the zone. And we saw how that saved me from getting smoked in gold waiting for that occurrence, right? So and on this particular trade, it's an auto trade, the newest strategy, where I just jump in right when I hear the event. If I know we're at an important area or one of those Mentor Q areas or spot gamma levels, I jump in, right? What am I doing here? Right, so right there. And you got two here. You got an SPX level and S&P futures level options. So I'm fine with that trade, but I'm fading a very, very strong market. So hopefully that these dealers, this has had a chance to rip too. So that's another thing, right? This has had, you can see you're already getting your reaction. So this is a brand new trade. Like I said, I'm still determining like how far I'm gonna let this go before I get out of one of them, just because it's such a good risk reward trade, like I said. So like you don't need to be catching 20, 30 points on these, at least on partial. So if this gets down, especially this is a spot gamma level, if it gets down here, I got two on, I'll get out of one. I got two big ones on, I'll get out of one of them, right? Just because it's a great risk reward. I got in right here. I'm risking. What would I be risking here? Because it is the traditional exit, so I'd be risking 6 points to make basically 6 points, and then I'll let the other one run, see if I can catch a runner, right? So again, you have this activity. The dealer, the sell ice doesn't mean it's dealers, but you have a big entity in here selling it, and the dealers are going to be hedging here as well. So you have a much higher odds of reaction. So that's what I'm playing off of. Again, I'm trying to short the strongest market in the history of the world, but let's see what happens. Somebody else is trying to short it too. So, paper, I say it all the time, paper's not always right.
Panel at the Bank of Greece conference in Athens.
But they're right more often than they're wrong. Why? Because they have huge orders and they can just hold the market here, until it relents. If people keep buying this, and this entity just keeps putting in sell ice, and this could be this entire entity this entire way, and they're not shorter term traders a lot of times. The market, if it keeps running into sell ice and doesn't do anything, it's eventually going to give it up, right? So they're not always right, but they're right more often than wrong. So my point is, thesis wise, you can say, okay, I'm okay shorting here. At least I have some big money behind me right now, right? If this breaks and moves higher, then we have trades for that. And then these guys are wrong the way we view things. Then we take advantage of them being wrong. So the whole idea of what we're doing is we're looking for concentrated areas of trade where traders are loading up. Somebody's going to be right, somebody's going to be wrong. We take advantage of the movement out of the area. That's all I'm doing. Because this is the most important thing you can look at, because it's real-time activity. It's all about volume. Volume drives markets. Price does not drive markets. Lines on a chart don't drive markets. Volume coming in right now drives markets. So that's why it is the crux of my trading. And again, my experience as a large trader back in the day, a long time ago now, but that experience helped me develop my methodology nowadays, right? So that's what it's all based off of. All right, let's see what else is going on here. Missed a couple trades. Let's see what else we got. So also some levels you want to, I put most of these in today. So you gotta come in. They're actually these Mentor Q levels. So again, I put this in here in the trading document. Go watch the video we did with them. I did it with them last week. Go watch this YouTube video. Not sure why that's not providing a link. Oh, wait, I gotta do that. Sorry, my bad. There you go. So you go watch it. He explains it. He explains how to bring in these levels. It's it's a good webinar, and he's a very bright guy, like most options guys are.
For you as a trader, because knowing
You can hear his Italian accent, so I liked him already.
Right.
Anyway, you can see that I need to utilize this more too, where it shows you all these important areas. So we talked about magnets, right? So the biggest areas are usually magnets.
and then we have our
So go watch that video. It's on my YouTube channel too if you can't for some reason access. If you're watching a replay of this video, this webinar, and you can't access it, just go to my YouTube channel and you can see that. Let's just see what else. So anyway, I wanted to funnel through these to see some of these areas, just so it behooves you every morning to know where these areas are. So when volume events start firing off, you're not scrambling to get your trades in, right? All right. So you see this is so. The other thing you want to know too when he talks about this, if this does break through here, it's telling you something as well. Dealers are hedging, but if it holds, moves higher. Now what was resistance is now support. So I just did another webinar with Jordan. He's a member of my trader. He's the one who introduced me to Fabio and Mentor Q. He got on the other day and shows how he trades this too. He's trading for more scalps, like quick. I just don't want to trade that way anymore. I'm too old for it, and I'm watching too many things to be staring at markets and getting in, getting out, getting in, getting out. But that's how he trades it, and that's fine. And like I said, he's not demanding a volume event. I am as well. So anyway, as this blows through, if I do step out of this, now I know if it comes back, it is support, and then we'd actually have longs off of this too, at least bark and lick, because algo guy's bullish. So I'll take those. So this is also a variation too, right? So we talked about this area. This is right when we got on, right? So I can still potentially take longs off of that guy and longs off of that guy, depending on what happens, as long as the most recent event doesn't show or prove bearish, aka get to the ATR line, right? So I'm still waiting to see what happens here. This was the confirmation for these events, right? So this was one. I can't merge these for some reason. My zone jar is not working on ES. I don't know why. But anyway, if it tags this price, and I actually have this zone in the spreadsheet, so you get access to the spreadsheet too. So for times like this, if your zone jar is not working or whatever the reason, that's where did I put it right here. All right, so I did put this zone in. So the validation price for that prior ICE event was 85.75. Is that right? No, that was that was this one. My bad.
At 10:45
So I didn't put this one in, so I need to put this
Eastern
one in.
time, we expect
88.50 down
comments
to
from ECB
86.75.
Stenoris, who speaks on a panel at the Bank of Greece conference in Athens.
So this is how I use this thing. 59, 86.75. And you put in your current ATR, that's just the 5-minute Wilder's
MT long
ATR.
retested.
And you get that on the zone drawing tool too. You just got to make sure it's right. It's very good now. Johan's really made this. See, that's showing a 4. So that's a little off actually. I was just going to give Johan props, but that's off. So I'm going to just use the Thinkorswim one, 3.80. It's not that big of a difference, but you definitely want the right values here. 3.82. I can't tell you how many times I've been ticked in my life. I've already been ticked like 3 times today. All right, I got that. So to make this a bullish event, we needed for that prior event, we need to see 92 quarter, right? Meaning this event right here, these two events, 92 quarter, and that should be pretty close here. You see right there, look at the bottom left print, 92, that's 92 half. So my point is, for the bark and lick, I demand an ATR retest And then when it comes back again, I go along that. So I can still go
Copper
along
ice
this.
iceberg sell
And then
HG,
if this one does the same thing,
150
I can go
contracts.
along that. So if it just does for that, I'll go along this event. If it does that, I'll go along that event. And I can potentially add with this event. So I don't know what I'm doing yet here. I am short the Sexy Gexy, trying to get a reaction. Just can't get any reaction short because there's just no sellers on the planet right now. But, you know, if I did get stopped out of that, even if I don't get stopped out of that one, I could still go along other strategies. So, you know, a lot of you guys are trading on one account. It's a good segue into the Apex stuff, right? So this is this is the trading funding service that I use for all these accounts, right? So that's right here. Talk about this every week. Where's it at? Right here. So this is a godsend for you guys, right? If I had this 10 years ago, I would have never had to leave the business, because this is like having your own trading firm behind you. So I left the business because my firm basically went under. I couldn't make money anymore. Held on for 7 years, and you know, I was trading with my own money. It's a whole different story when you're trading with your own money that you have to live off of. Anyone who's ever done it knows this is like having your own trading firm. So anyway, any sale they have, use Pulcini 50 and you get access to these accounts depending on how big you want to trade. So it's pretty simple. You have to make the profit before you lose the threshold. So when you start, it's, you know, you got to make 15 grand to 6,500. The catch, it's not really a catch, but you know, say I get up to $14,500 profit. It's not a very good drawing, right? I'm $500 away from qualifying for the account, and say I draw back 6,500. Well, I blow out the account. So that's the one drawback, but it does teach you to manage your risk. So anyway, this is the one I put my name behind. I've been using them for almost 3 years now. I've been paid multiple times. There's multiple traders in my room that have been paid by him, so they are legit. You hear all this nonsense online. They are you know, they've changed the rules because they're changing the rules, guys, because there's big changes coming to the industry, where these are going to have these funding firms are going to have to put people live, right? So they had it pretty loose as far as, you know, qualifying, things like that. They're tightening it up. They're all tightening it up, and the ones that are not tightening up are not going to be in business for very long, because they're going to have to start putting traders live. When you put traders live, they're risking their capital, real capital, in the real markets. You know, they can blow out. So they, you know, I can understand why they're doing it, but it's not just Apex, it's across the board. So it's the one I use and the one I put my name behind. And a great option if you guys. So what I was getting at before that rant was, so you can see these trading strategies I have. Each one of these strategies I've been talking about, we've only gone on over a couple today because there's been nothing happening. Each one of these is assigned to an Apex account, right? So it helps me keep track of them. My point is, you're going to have potential trades where, for instance, I'm short Sexy Gexy right now, right off of that event and that volume level, or the options level, but I might put on a bark and lick long. I might have dueling positions on. So if that's the case, you know, if you're live with Apex, you don't want to have dueling position, meaning you don't want to have, say you had 2 live accounts with Apex, you don't want to have one short, one long ES, right? They'll take it away from you. Just use another funding company then. So say, okay, I'm going to use, you know, there's a multitude of them now. I'm going to use those trading for my reversion trades, and then I'm going to use Apex for my position trading. So, you know, but I do highly recommend that you have different accounts for different strategies, because then you can keep track, and you know, it's not deciding. You know, you get opposing views. It's like for this one right here, it's like, do I put on the Gex short or do I wait for the bark and lick long? I just put them both on. Just have different accounts for them, right? So that's what I recommend. That's what I do. So you can do whatever you want. And that's my recommendation. All right. We do have a potential. This is a potential bark and lick long, and you see the liquidity up here. You know that's getting filled. The problem is I don't want to go long into the Ludwig level. Right? It doesn't mean it won't. They form new ones all the time. There was already new ones formed this morning. Actually, I take that back. I'm sorry. I was thinking we were down here. So I will take this bark and lick right now. So this is qualification. It's already, this already tested twice. We have a new trade for this one too. But anyway, this comes back. I should be getting long right here, right now. So I'm going to take those. I'll show you the trade I put on earlier in
Stocks by
NASDAQ.
NQ, 158 contracts.
Hold on.
NQ long entered. NQ stocks
Right, so this is a perfect scenario too.
152
So I'm going
contracts.
to put on bark and lick here. And what I mean by perfect scenario is, so I just went long off of that. I almost missed this trade. But the point is, ATR, retest, confirm. I put on bark and lick. Now we got a new event. So this is how I trail my stops for my orders. I trail my stops based on something that's happening in the market, not because I want to break even on the trade if it starts rolling and comes back. What do you think these algos are doing to traders? That they know that's what traders do. So I only trail my stop if I see another event. So my stop for this bark and lick, say this didn't come in, was going to be down here. Now I have the new event. I get to bring it all the way up here, smack dab in the middle of that zone. I try to move them as best I can. I move it out of prior events, so I'll move it down to like 98, right, or 97, 75. I just want to get out of the zone. But this is, I just saved myself potentially if this does turn around and sell off. I just saved myself. I would have been at stop was at 72, 21.072. Now I get to bring it up to 97. So I just saved myself 25 points of risk, right? So I am long bark and lick. I'm glad I saw that last second. This is the lick I'd be shooting for. It's not that great of a risk-reward trade. But, again, yeah, I want 5R when I put on trades too. But I don't ignore important areas. And you can see all of these options areas as this comes up here too. So let's see how these correlate with the Mentor Q levels. I don't see any here. So, again, they have different computations on how they figure these out. There's none on Mentor Q, but you see all of them in... here, you got the QQQ. I don't know why that wouldn't be the same, though. I don't know why. Is my QQQ on here? Yeah. That's odd. I'll have to ask them about that. But anyway, you have all these levels here, too. And if it starts to struggle here, these alone are areas I'll get out of some of my trade if it starts to struggle, right? This is part of this.
Sell HG. 150
I gotta watch this liquidity level here too. I'll get back to this, but these are areas that I pay myself as straight out of trading in the zone as the market makes money available to me. Ludwig levels, market power deposit. What I'm looking at now is struggle to get through heavy resting liquidity and spot gamma level, and I'm going to put in here Mentor Q levels as well, right? So when you're watching this liquidity, we know it's a magnet, but you got to remember the algos. This is why firms use icebergs, right? This is sitting in here. When this gets close to here, these algos see there's a bunch of size in here, and they think just kind of like this. They think whoever is in here wants to sell, and they run it away trying to make this guy chase, or whoever this is chase, and then they turn around, they put their bids in, and they get long, and then it comes right back, right? So the point is, watch these areas. If I'm using this as my target, it doesn't actually start to eat into it. If it gets close and starts to run away, I'll get out of the trade, out of some of my trade or whatever, right? It doesn't have to tag this liquidity. Most of the time it does, but first move into this, a lot of times these algos pick it up and they run it away because they want this entity to chase. This entity is not chasing anything. It's been in here all morning. They obviously don't know that part. It's not built into the algo. But this is why firms use icebergs, because if they put in, someone came in here and put 500, here we are right here. So I'm going to get, if this can't push through right now, I'm out of my lick trade. Come on, you can do it. I got to get my tick strike going too. This is how I judge as well. So you can judge with the market pulse. We'll get into that. See, it's already running away here. I'm going to get out of these. All right, so again, it doesn't mean it's not going to push through, but I don't want to sit there and watch this come all the way back if it can't push through here, because I know these algos are using this area, they see this area. If I had this up, I could have held a little bit here, but whatever, I got out of some. I still have my bark on. You see, like if you get to an important area and you're trying to distinguish whether you should get out or not, or figure out whether you can get out or not, let this stuff tell you. Like they're buying these Mag 7 stocks. It's got a much better chance of pushing through like it is. I'm okay that I got out there. If I would have had this up, I wouldn't have got out. You see, even the futures, everything's firing up. But I still have bark on somewhere with that. And I'm just happy I saw it because I almost missed that trade, to tell you the truth. But I'm going to be watching these areas too. If this can't get through, then I'm probably going to get out of my, at least half of my bark long that I just put on here. And then you definitely want to watch the Ludwig level up here, right around 21,200. So you got these spot gamma levels, and you have the Ludwig level up here. So anyway, Mentor Q is that's what we've been talking about today. It's just, and it has you have all the stocks and all these futures markets you can get the levels for, right? The options levels. So it just helps you understand. Like a lot of times you'll be watching a market and it'll just turn around and rip the other way. Like, what was that? Well, because you didn't realize there was an options level there. Very important information, like we talked about, because it's just such a. It's where these markets are going with this options activity. I forgot what I was going to say now. All right, if you guys got questions, throw them in. Oh, I was going to show. What was I going to show them with their queue? I was going to show something else here. So anyway, that's in here. This is you get a discount to this stuff here, and then you watch the video. It's in that document that I posted. Let's see. Well, let's go in order here. Can you please, so I never got into the relative volume. So I don't trade the relative volume. I keep an eye on it to determine when to stay out of trades. So we talked about the reversion trades. That's what I was showing you with I could show it with any market because it happens nonstop in every market. But say that, we get the event and I have my reversion trades loaded up here. And this is more of an algo trade, right? Like your own little algo. You do it by hand. We do have this running automatically. We have an algo running at a trading firm right now because I can't keep up with these things. But if you're doing it by hand, you just put your orders in. Anyway, if you see these levels getting tagged and you see huge relative volume coming in, you do not want to be taking reversion trades, right? That's one of the disqualifiers. I'll have a course on that as well, the reversion course. I wasn't going to put it out initially because we do have this working with the firm. But I think it's okay, especially you're going to have, the more people that are trading these areas, the better it's going to work, right? So I'm going to release that course here by the end of the year too, on how to trade these. I mean, it's pretty self-explanatory. Like if you get the zone drawing tool, you can see where to enter them, but we have disqualifiers. There's certain times you don't want to take them. There's different variations. So for instance, I just introduced a new trading strategy called Back in Black. And I actually caught one earlier in crude. That's this newest one. Take the 1, 2, or 3 ATR trade after the market touches an important area and begins to move back through the given ATRs back to the SI events. Stops are placed at the normal ATR. So this is the one I took in crude earlier. And it actually worked. I got stopped out on one of them. It was really annoying because I got filled with the tick, stopped the tick. But anyway, that was off of this event here. So there was sell ice earlier in the day, and actually one of my trader members posted he caught the easy long here, so that was a nice trade. I missed that one, of course, because I don't like the easy winners. Anyway, you can see this blew through the 1, the 2, and the 3, but it tagged. It came real close to tagging the market profile composite low, so this was an important area. So it was actually, I think it was right here. So I saw that, and then I saw VWAP. Actually, no, I'm sorry. It was here. It was close to that, but I was watching VWAP, and it kind of couldn't get through there, and it started to come back off of it, and then I took these reversion, the backdoor, back in black, we call it, and I took them as it came back. So I took the 3. It's hard to see here. I'm colorblind. What's this? Yeah. So you see it did blow through those, but as it came back, it tagged those areas. It got close to that market profile composite high, and then VWAP. I took the 3 coming back. I took the 2 coming back, and I put my stop at the 2. I got filled to the tick, stopped to the tick. That's my MO. And then it came back. So I stopped out of the 2, but I made money on the 3, and then I put on the 1, and it came right back to that zone, and I was out. So that's the newest trade, too. So I'll have a course in that. But my point is, when you see heavy relative volume, you do not want to be taking reversion trades because the big money is in here. The same with the, and I didn't actually have this as a rule, but I'm going to have it as a rule. Same with the sexy XE trade into these gamma levels. Actually, I gotta get out of this thing. I forgot to put my stop in here. That's not what I want. That's not what I want. Hold on a sec. Be careful if you see heavy relative volume. It's these options dealers have to hedge, but they may get run over because there's bigger money playing. All right, I should have stopped out of that first. Well, both of these actually. It looks like. Hold on. This was the sexy XE trade. That was the auto trade. So I'm just going to get out of these.
Order filled.
So those didn't work. But the point is, it's just like anything in trading, right? You keep putting the trade on if you know you have an edge. So trust me, if this rips up to this, which it looks like it's going to, well, you got 2 different trades here now too, right? If this came back, say I got a new event, you can take long because what was resistance is now support. And if it moves into this and I get sell ice or buy stop runs that start to fail, I'm going to get in. I'll put the short right back on. I am shorting a market that is ridiculously bullish, but I'll still short it. And you see, you got the same levels here. Actually, that's the wrong market. Sorry. Take that back. So this is why I use both of them. So they have them. Spot gamma, there's no levels right here. There's one more up here. So anyway, for my traditional areas, we've already talked about this. I was waiting for an ATR retest to put on bark and lick. So that did tag that. It just has not come back to that zone. So if that doesn't happen, I can still do it off of that. This just tagged this ATR. So if we get this, I'm putting on bark and lick off of that guy. And I just wait. These are how I trade these, right? So I need to see that pattern to get in these trades, just from trial and error of trading about 4 million of these in my career.
HE long validated.
What else you guys got? How do you trade, for example, NASDAQ today? Market is going up and sell ice keeps coming, but the market keeps going up. Yes, but just like this, there's sell ice coming in the ES too. Have you seen any of these events fail to the downside? No, so I don't get in them. Yeah, it's someone's selling this. It's not working out for them right now, right? And it doesn't matter what they're trying to do, right? You don't know what they're going to do unless you're sitting next to them. I don't know if they're getting out of longs from yesterday. I don't know if they're hedging options positions. I don't know. I don't care. I know this area is concentrated, and I talked about this earlier. I said the move out of here is going to be there's traders placing their bets here. Whoever's wrong is going to be puking them. We take advantage of it. But this is why I demand my pattern. So not one of these events has shown bullish or bearish, right? What does that mean? It means it has to tag the ATR. This is why I just don't jump in when I see sell ice. So whether you're looking at NASDAQ or ES today, none of these events have confirmed as a bearish event. So I stay out of the way. I'm ready to short if they do. There's more here too, right? Do you see this? Did this first of all, yeah, you had one here too. So did this prove bearish? No, and actually I went long off of this. I'm sorry, I went long off of this guy. I missed this one, I could have gone long. No, this is the one I passed on because it was in the lug. So there was pre-market. I did take a bark and lick off of this. This is the exact pattern I've been talking about this entire webinar. It was before the open. I don't usually like taking trades before the open, but in this market environment, I'm taking a long here. Here's your ATR. Tell me if you've seen this routine, this pattern. Here's your retest. Here's your entry. Your stops here. Go on. So then it did run into sell. This was a double whammy. One of my 6 distinct trading setups that I teach in my course. That is inherently a bearish event. Did this tag the ATR below or the entry below? No. Did I go short? Absolutely not. I could have put on another long there, but at the time that was into the red. I didn't do that. And then you had more sell ice here. Did this prove to be a bearish event? Sure didn't. Did I go short? Sure didn't. So you see why I make the market show its hand. You have a much better chance of it working if you can push the ATR out of there. This was bullish. This other one was bullish. This one was bullish. Like, they're all bullish. I never went short. Yeah, sell ice, great. Like I've said a million times, paper is powerful. The big money's powerful, but they're not always right. And they weren't right, and I did not go short. This newest event, dumb money pukes are usually fade trades. We have a setup for this. It's called the stop and hold, where you do get the puke and it just continues, just like this one. That means the big money's behind it. But usually stop runs are fades. Do you see me getting short this? No. Did it confirm short? Remember I said I had shorts working here? They have not put on a short yet. So today, if I'm just jumping in when I hear events, my traditional strategies, I'm not talking about sexy gexies, I'm talking about my traditional, I would have been run over.
Sell 81
That's
billion
why I demanded
in
pushing
3-month
ATR out of there.
bills
It
on
would
November
behoove you to
12th,
listen to what I'm
on
telling you,
November 14th.
because
Sell $72 billion
until you see
in
4 million of these
six-month
things,
bills on
then you can do
November
whatever you
12th,
want.
November
And there's
14th.
traders in my room now, like for instance, Madam Shizzle. She's been in my room for probably a year and a half, maybe 2 years now. She's seen enough that she's put in her own spin on things. Like she's taken my stuff, my blueprint, and then made it her own and put her own stuff in. That is what I want you guys to do. So my trade room and these webinars are not meant for you guys to mirror my trades, just blindly put selling or buying based on what I'm doing, right? It's to teach you how to do this for yourself. You are never going to make it as a trader if you're just copying someone's trades, right? I give you the blueprint. I show you how to trade these trading events. I give you my trading strategies. There's nothing to be said that you can't come in here and take my trading strategy, say, oh, I like that idea, but I need to see this, or I'm going to add this. I make sure this is at a, I want to make sure this is at a Fibonacci level or a moving average or whatever. Fine. Take my stuff and make it your own. But the whole point is to learn to do this for yourself. All right, I'm still along the bark here. You see we're running into these levels. I'm going to try to judge the best I can if it's going to blow through here. This is tick strike. This is in that document as well. Everything I use is in this document, and most of the stuff you get discounts to, right? There's a zone drawing tool. If you are a part of my trade room, you do get a discount to that. Here's the course. I'll pull that up in a little bit. Here's the, if you can't get in my room, these are free part of my room. You get these inflection zones that I've been talking about, the Izzy zones. And you get the spreadsheet. I showed the spreadsheet earlier because you got to use it sometimes. This guy, right? This has the reversion lines on there. So this spreadsheet is what is on the heat map with the zone drawing tool. So you get all that stuff. If you can't make it in my room, you can go to this, and it's, you can get a subscription to that as well. $49 for the spreadsheet, $24 for the or combine. And then, if you need, this is my website. I always get all these questions like, do you have a trade room? Like, I post this stuff on YouTube. Do you have a trade room? Like, yeah, like that's just Google. But I show this every time. This is my website. If you want to come to my trade room, I do this every day. Actually, that's not it. Sorry. Where's that? It's this one. Right? This is everything. And I just found out the other day, like if you have a smaller screen, some of this is cut off, which is not cool. I got to go in here and fix that. But anyway, here's my trade room. If you want to, this is what I do every day, usually twice a day. If the afternoon's good, but here's the different, and you get these discounts to all my stuff. So the point is, you get the zone drawing tool. You get the spreadsheet and the Izzy zones as part of my room. But if you need to get them on their own, you can do that. Website, here's my email. If you got questions, here's my Twitter. I try to post the trade of the day. I've been doing it lately because I've just been very busy, but I did one a couple days ago, I think.
Soybeans ice
This is the actual trade room because people can't figure out how to go on my website and click on trade room, so that's that link. And then here's all the discounts to everything I use. Bookmap, basic software. Click on this, you get a discount for the what do they call it? I can't remember now. Let's see here. Global Plus, right? You want Global Plus because you get so much more. You get the sweeps, you get all that stuff. You get discount to that. You don't get a discount to the MBO, the SI indicator stuff, but you still want that. This is the crux of my trading. Here's the Apex, we talked about that. Here's Mentor Q, you discount to that. Here's the YouTube. Oh, by the way, here we're retesting this. This is retesting too, surprise, surprise. And I just got done saying I was going to get out of these, and I got sidetracked, and then look, I just cost myself 30 points. So I was getting, this is why I get out at these levels. Like, I want 5R off of that trade. Actually, it was this guy, right? I want 5R, but I don't ignore areas when it gets to them. So that's enough for me. I just cost myself 30 points. I was going to get out of one more up here. I'm already out of my lick trade, but I was going to get out of my bark. So if this starts coming up here again, I'm going to get out of one of these. I just cost myself, but that's what I get. I got sidetracked. This is one of the drawbacks for me doing webinars. I love doing webinars. I love teaching, but I make so many mistakes because I'm chirping. Hold on, still got 4 on. Come on, just give me one more move up here. You know you want to, and here's a great example of the market running away from the liquidity too. It sniffed that. I said, how about we just try to make it chase it? Did you see these guys chase? No, right? So the point is, the algos don't know. The algos just see this order in the order book as it comes up here, and they run it away. Perfect example, right? And this is a perfect example why big money has to use the icebergs like we talked about. All right, I'm going to see if this is going to come back up here. I was going to show you something else, and I forgot now. Oh, we want ES. Let's just retested the zone. Surprise, surprise. So here you go. This is the pattern. Over and over and over. Tag the 1 ATR, back to the zone. So I can take barks and licks long off of that, and you have a new event. I can trail my stop to that guy, and I can take barks and licks off of that. So now if this comes back out of here, I'm not going long yet. I need it to move back out. Those are my rules. 95.75, and with the zone drawing tool, it tells you put in your capital and what you want to risk per trade. Again, I would not be risking 10% of your capital if you're trading a real money account, because you will have a day where you'll blow out. I make it 2%, but these are the Apex. I'm a little more aggressive with them. Anyway, I could put on 9. I mean, this is based on the new zone, but it's the same. So I could put on, if this comes back, I'm going to go long, bark and lick, 59, 95, 75, and I'm going to put on 9 micros, or you can put on one full one, right? I don't trade the full ones because
long retested.
I want to get, I don't want to just have one on based on my risk, right? It is all or nothing. I can't piece out as it hits important areas. I can't believe I screwed this up. All right, so I didn't get out of any of my bark up here. That's very upsetting. So I just cost myself 40 points. So my stops here, I'm going to put that in. That's going to really, really suck if this... I'm going to single-handedly stop these markets, which would even be more money. But anyway, I made a mistake. I just was talking about getting out of some here, and I got sidetracked. So hopefully you guys were listening to me, and if you were long, you got out of a couple there. But this is exactly why I get out of these areas. Very upsetting. All right, so this comes back. I'll go long, bark and luck off of this dude. You could still potentially go long off of this one as well. We already talked about this. As long as this one doesn't prove bearish. So if it tags that, then I can't do either one of these because I'll always default to the most recent event. If the most recent event turns bearish, I can't go long off this prior ones, right? So if that holds, I could go long here off of this guy and here off of that guy. So that first entry was at 93.25. So I'll put on 9 at 93.25, bark and lick, long. We got FOMC today too, guys, so it could just be doing nothing for the next couple hours. That's at 1 o'clock Central, I believe. And then I'll also put on bark and luck off of this. So remember, this is the most recent event, this buy ice. If this tags this ATR line, these longs are DQ'd, aka disqualified. All right, I may get a chance to get out of a couple of these again. So my mistake may have not cost me too much. All right, I'm going to get out of at least one right here. I already screwed this up, so I'm not going to watch this thing come all the way back on me. All right, I got out of one. If it gets up here again, I'll probably get out of another one because I was going to get out of two up here. So if that happens, I'll get out. In the meantime, I can go long. I can add to this bark and lick I took off of this.
CCB Stenora says if Trump does what he says he will on tariffs, it will negatively impact the European economy.
ATR, retest, confirm. So I'll put these back on and see if there's more lick up here. I wouldn't trade to this lick per se because it's right on top of this entry. But this is still good liquidity, and that I think is the red lug too. So I'm going to put this. I'm going to add to this bark and lick now. I know I just got out of one, but if this comes back, I'll put it on. So I was just saying I was going to get out of some here, and I would have. But now that it's doing this pattern, I will put on new trades based on this guy. I'm fine with that, right? But I should have been out of some right there because in case this went like this, right, and then did that, I would have been out of some at this area. But now that it did this and it comes back again, I'll put on full strength barks and licks again. And I still have some bark on from my original one. So 61.25 long, I could put on four micros, risking $500 because I'm risking $500 on these trades. Put that in 61.25. Probably asking for trouble. The deeper you get into the morning hours, 10:30 to 12:30 is usually not a good time to be trading. Not usually, it is. It is not a good time. It's cost me millions of dollars. But these markets are so ridiculously bullish. You just want to take advantage of any bullish events you have. So if that comes back 61.25, I will add to bark and lick. And then I have my bark and licks working off of this guy and this guy, as long as this guy doesn't prove bearish. And there's nothing for me to short up here off of that. If that buy ice turns into a broken ice event, so this is what I'm talking. Let me pull this up real quick, guys. I always forget to get this.
Crude ice iceberg by CL.
So there's always new traders on here trying to figure out what I'm talking about when I'm saying double whammy, broken ice, stop and hold. We just got something in crude too. So I'll go back there. Here, I'll take a look while I'm waiting for this. Excuse me. So this is what I'm referring to. This is my trading course. You can get this on Bookmap Marketplace or my website. So this goes over everything you need to know as far as all the setting it up, the thresholds. If you have the zone drawing tool, it automatically draws these zones based on the thresholds, but you want to know them just in case you have to draw them manually. All the settings for the sub chart, on chart, sweeps, and then the drawing of the zones, how to draw them. I was drawing them wrong for only about 7 years. I was drawing at the top of the bubbles instead of the middle. But anyway, this is progression, how we made them exact. Now they're exact. And then these are the setups that we're referring to. So Dumb and Dumber. So when you get a stop run that fails, that's what they usually do, because it's just the dumb money retail trader puke. Again, don't be offended. I'm dumb money too nowadays. Not $1 million trader anymore. I will be again, but right now I'm still the dumb money. Stop and hold. We're seeing that. That's what I'm potentially trading off of this in NASDAQ. This was a stop run that held as of right now. There's usually the big money behind it. Titanic. These are all very technical terms. It's when you get a market that moves into an area that holds. I'm kidding about the technical terms. So like a Titanic would be, what do we get today? Anything? Let's see here. This was a Titanic in gold. So you had buy ice that held. That's a Titanic, right? We have broken ice when the areas break. So we've had broken ice in. So somebody's been selling ES and NQ all day. This is all broken ice. Broken ice, broken ice, broken ice. This is why I didn't short these, because they never got the ATR above. So somebody's been selling them. They haven't been right yet. Doesn't mean they don't keep coming in. This might be them starting to peel out, like, oh crap, these didn't work. Let's get out of this. You're never going to know. That's the whole point. Stop wasting your time. I can't tell you how many traders are like, well, what do you think when you see this and this and that? I don't know what they're doing. I don't care. I know this is an area of heavy concentrated volume. Somebody's right. Somebody's going to be wrong. Let's take advantage of it. That's all I'm doing. Don't waste your mental energy trying to understand what the big money's doing for the next week or whatever. Just mark these areas and trade them accordingly. That's all you need to do to be a successful trader. Trust me. So yeah, that was the, and then we talked about broken ice, double whammies when you get, so those are inherently bearish. I talk about this in the course. So for instance, this is a good example. This should have been a bearish event. It wasn't. I never went short. But when it's not bearish, so something that should have happened, I talk about this all the time in my trading too. When something that should have happened, doesn't, the subsequent move the other way is a whopper. So this should have been a bearish event. It didn't. It never confirmed bearish. What does that mean? It's probably going to rip off the page. It's exactly what it did. So when these events that you expect something don't happen, that can give you a thesis. We talk about thesis all the time. That's how I trade bigger in the direction off of these things. This was telling you something was up, and lo and behold, the thing moved, over 100 points higher. All right, so I'm still going to go long here if this comes back. NASDAQ and ES. As long as this doesn't, did this confirm to the short side? That was real close. Let's see. Bookmap Bob always tells you. You'd see it right here. It did not, but you can also pull it up on your here, because you hear, especially I'm watching so many markets, I hear it, but I don't actually hear it. It'll tell you if it disqualifies or if this confirms bearish, and it didn't. See how I just missed that? That's the ATR line right there. It did not take it, so this is not a bearish event yet. So I can still take my longs off of these guys. Let's see if you guys got any other questions. So, Aksath, I can't pronounce your name. He said, how do you trade NASDAQ, for example, today? Market's going up, its always keeps coming. Well, because you wait for the validation of whatever way it moves. And that does not validate short. I never went short. Dominique, hi Scott, do you have your Stops and Iceberg accumulation settings for 1 minute?
Fed bids for 4-week bills total 274 spot 5 million.
So I use stops, and I've used this from day one. I've never changed these. I think they're still relevant. I use 10 seconds for stop runs. That's probably too long. Stops are pretty instant, but I use 10 seconds for those to draw, and I give it a minute for icebergs. That's probably too long too, but that's just how I like to look at them, right? So that's the stuff on here. But the zone drawer is based off the on-chart stuff. Johan, he's a trader, developer, my trader, and we came up with a way to draw these, and it's incredible. It saved me years off my life. But that's based off of the subchart, which is the same information. It's just
stocks LCL 151 contracts.
Hold on a second.
CL short validated.
All right, I just got done saying there was an event here, and then I missed the trade. Looks like. So this was a broken ice event, right? You had buy ice that came in, just validated short, so I can still potentially short this. Let's see what's going on here. So that step one is to wait for the volume event, but you should already know these levels pre-market, so you're not scrambling like I am right now to see where we're at. So that was into this Izzy zone. So I could take a short there. And this is actually a good area to short. That was a balance area that broke down. This was yesterday, but it broke down again today. Now it's just back to this, all this congestion, aka balance area. It's just traders placing bets. So this is actually not a bad short area. If this actually gets a little higher, I would take a failed balance breakdown because it's tried to break down this morning. Those are the best trades in trading. So that's just a thesis.
Iceberg sell CL.
But I can short this right now, Izzy. So this was the entry for that. See at the bottom left there, 71.73, and I can put on 8. I mean, this is off this new event, but I could put on 8. So the great thing about this, now I can short basically right here off of that dude, and I can trail my stop to that. Right, because my stop for this, what the yellow line is, it's telling you your entry and your stop price based on my rules from watching 5 million of these things. Right, so if I shorted, I short right now, I better shut up and put the trade on. Hold on here. Hold on, I want to short this too.
Order filled.
All right, so, and you got some sell ice coming in here now too. So I shorted off that. I just saw that this might be a, I just saw this might be another area too. Let's check. This might be an no pick. It was right in the middle of this profile composite. So these areas I get short. There was nothing here for, I get short. I'll get short at the bottom. You saw it reacted earlier. Or the top of these. Middle, I don't do anything, so nothing to be short there. So the only thing I got working short is an Izzy trade. So I'm short that. That was this guy. Broken ice event into that inflection zone. That was the entry. Now, this stuff, I'm going to trail my stop. And I could potentially take shorts off of this. Maybe bark some licks. Not sure why that changed colors on me. No, I can't do that either. So for bark and lick, remember I need algo guy in my direction. So those shorts are off the table. So all I have on, I don't demand, so you see on my trading strategies, I don't demand algo guy in my favor for lugs, to fade lugs, or Izzies, just because they're so powerful. All right, barks and licks, I demand it because they're in the middle of they could be anywhere, right? So you can see Izzies, inflection zone. I take them first move out too most of the time. There are variations. I'm not going to get into that right unless we see it. But it says you don't need algo guy filter for that. For that, I don't need algo guy filter for slug. I don't need algo guy filter for pick. Those market profile areas I just showed you. So barks and licks, I need the filter. For this one, I don't. So I'm willing to take that, and I'm short. Stop. Again, was originally up here, 72.36. I bring it down. Actually, this is the newest event. I'll bring it down to 72.11. So I save myself 25 ticks if I end up getting stopped out of this. Put that in. Crude has been an absolute biatch, pardon my language, to trade lately, so you may want to be careful. We call it LB. Madam Shizzle named it in my room. It stands for little bitch, pardon my language again, but it's very accurate, and it makes me laugh, so I'd love to say it. And let me put my stops in here. So I'm short crude Izzy.
Prior CL short validated. CL short validated.
Now this is bearish too, but there's nothing for me to do off of this guy, unless algo guy pulls. Right?
That's 11:30 a.m. Eastern Time.
Alright, so
US
now-
$95 billion in 4-week bills. Prior high yield 4.58%, and prior bid
Where will I get out of some of
2.82.
these? So I entered at right around here. This was 71.75-ish. I already got 25 ticks in my favor. Right, so let me see what my important areas where I'll get out of some. I usually would get out of half at yellow lug. I mean, I got in basically at yellow lug. I got into 75, so that's not on the table. This is market profile composite low too. I usually get out of some there. So I can get out of one here. This is not much of a trade. It's like getting a 20 tick trade. But I'll get out of one because this is an important area. I know it's not a great risk reward, but I don't ignore important areas. Hold on. See, I already missed part of that. That was my bad. Right? This is an important area. One, you got yellow lug, and it was the bottom of that. It was only, again, a 20 tick trade. I didn't get out of all of them. I got out of partial. That's why you want to trade micros instead of just trading one big one.
Prior
And then what do you do
CL
here? You're
short
like, do I get out on a
retested.
20 tick
CL short
trade?
retested.
See, that thing bounced right off of there. That's why I got out of one. Anyway, that's what I do. That's how I trade. Here's your retest. Surprise, surprise. So this actually was a trade. You could have taken it back in black. This was only one ATR, but we just talked about this. So I just showed you, tag that market profile low. Well, you could have taken that one ATR right back to the zone. You're out. That's the trade. That's the ATR trade. So anyway, I'm short. I missed my chance to get out of on my other account down here. That was still a 25 tick trade. I just missed it, as usual. How many exits have I missed today? Like 3. All right, so that long's working here off of this stuff. Talked about that at length. And I will add to my bark and lick longs in NASDAQ. And remember, the FOMC is at 12? Yeah, 1 o'clock Central. So this may just do nothing until then, especially at all these buck gamma levels, but I'll still take the long. All right, see if you guys got any questions. No questions. If you guys have questions, put them in YouTube, please. All right, now we just watch paint dry for a little bit. What was that? Did I fill on this? No. Let's see what just fired off there. It'd be really surprising if I forgot an order in the order book. Not.
NG short
Oh, I
validated.
just filled on now. That was a yes. I got filled to the tick as usual. Again, it happens about 10.
Prior
Most
NG
traders, it
short
happens 10 times in a
validated.
year. I get filled 10 times a day. So remember, I went long off this guy. Actually, I made a mistake here. I should have put it outside of this. But remember, I talked about that. Here's your retest. Here's your entry. I just filled right there. I should have put it outside here. Hopefully, I don't get burned on that. I don't like entering in prior events. So anyway, I'm long 1 bark off of this. And remember, I had another bark off of that. That entry is up here. Bark and lick I have on. So see how it's struggling? I should have put this outside of the zone. I just blanked as usual. So if it comes up to here, I'm going to put another bark and lick at 95.75. So I'll have 2 positions on for both strategies. So you can see on a day, I say this all the time, on a day, when you get a trending market, you can keep putting multiple additional positions on, and you're just basically taking them off the new events, right? So I put 1 off of that. I'm about to put 1 off of that, and I could put 1 off of that. So I could have 3 positions on. I'm just trailing my stop to the most recent event. That's how you catch trending days with barks and licks. All right, so I just want this to get another tick higher, a couple ticks higher than I would have filled anyway. Come on, you can do it. The other thing we want to be watching here is, talked about this earlier too, Hero and Trace. So you do want to, remember we talked about this being a magnet. I want to watch this area pretty closely. This is current stuff right now, right? That is at 59.70 SPX, which is, all right, I would have been filled anyway. There, that makes me happy. So 59.70, 6 points, it's about 50, it's 601. So I'm going to watch that very closely here. When it moves into 601, that's this level.
That's 11:30.
Because these dealers have to hedge when it gets up here. Doesn't mean it can't blow through, but you know, you see it starting to get right up here too. So, and especially this time of day, we're getting into that 10:30 time period to 12:30. You got FOMC. I'm not saying the market can't move substantially higher, but it's more unlikely. Is this a pretty big move, by the way? Is that a big move? Did the same thing I was telling my room in 2016. It sold off initially like overnight, and we had puts, my buddy and I couldn't even get out of them at the time. And by the next morning, the market ripped off the page, kind of like it's doing today.
CS short retested.
What am I doing here? Where is this? So anyway, keep an eye on that level. And let's see what Hero's doing here. So this is more real time. This is delayed a little bit. The trace, but the Hero is updating pretty instantly. So, just want to pay attention to things starts to rip down. The dealers have to hedge. So just pay attention. They're not the only game in town, like I've been saying, but you want to pay attention to what's going on, especially Mag 7. So I don't see anything really happening in any of these. Let's check our Mentor Q levels. So that's that same area that we just saw. Remember I said 601, 6001? Well, you got all these up here too. So if it does make it up here, I'm definitely, especially into the FOMC, I will be out of the trade, very likely. And then you also have, I think you have red lug up there too. So you have a lot of confluence. Let's see where this red lug is. Yeah. So I'm going to be very, very cognizant up here of what's happening. Watch it. Use your tick strike. Use your market pulse. We haven't talked much about market pulse today, but because nothing's really been going on. But you want to see if we can find some of the examples. Probably get one here, and so that you can trade scalps off of this thing too. Obviously it's not as powerful as the SI events, but it's very meaningful. So let's turn off Stops and Icebergs for a second just to look at this. You can see over here. Sometimes these are associated with stops, but not always. And I have this set for an hour, so I'll show you here in a second. So this is the pattern right here. It happens over and over and over. So you saw the big buy. I have mine set to an hour, so let me just show you the settings real quick. You go here, market pulse. So this is like tick strike on steroids. They actually came up with this. They developed this because of me, and then they just ran with it. Now it's this incredible algo that gives you all these different. It's ridiculous, but the main one I use right now is volume, pressure, and balance.
Biden says
and
we
I
will
set
have a
it
peaceful transfer of power
to an
on
hour.
January 20th.
Right, so it defaults 5 minutes. I don't change any of this stuff. You can change the threshold, meaning it will only draw this color if it hits the threshold. So I have it it's default 70%. So if I'm seeing the 70% of the highest buying, most buying in the last hour, it will color, right? And I changed it to an hour. The training period is how long you want to look back. It's set for 5 minutes. 5 minutes is too short in my opinion. I make it an hour. I want to see meaningful buying or selling, right? So you can see here. Here it is right here. This started here. You got more here. Here's your retest. I have a video on this. It retested that exact area and then ripped. So you can trade off of this too. It's very fleeting because it's not as, again, like I said, as powerful as the iceberg events. That was that.
Retested.
That moved away. Here's your retest. It even went a little lower, but it never violated that below there.
Shortly expecting the results of the 4-week.
So you can imagine when you're getting this stuff on top of, you can actually add to your trades and get out of some of your trades if you're really, alert, because the stuff's fleeting. But you gotta, you can add to your trades. This is a way to add without another iceberg event, and you can see that thing ripped. So that's market pulse. And you can also use it when it gets quiet, right? You get up to an area. I'm using tick strike 2. I still haven't filled on this these additional longs here, by the way. But you can use this to judge when you get to an area. If this is quiet, market pulse isn't, nothing's happening here, you say, okay, I'm going to get out of some because there's no aggressive buying happening. And then the other thing you can watch, these are the stocks. I have this on another computer. So you need the DX feed for this stuff, but these are all these individual Mag 7 stocks, right? So you can do the same thing you do. We're talking about coming up with a thesis with liquidity. You can see you get the buying and selling here too. I got the market pulse on these too. So this is Tesla. Real surprising this thing rallied. Elon Musk, part of the White House stuff, but look at this. So it's like, yeah, there's a little bit here, but look at all these bands of liquidity above to help you just come up with it. I'm not trading individual stocks, but obviously these stocks are very important. They are the drivers of these indices because they're the most weighted, right? And you can come up with ideas and see how the market's reacting with market pulse, so on and so forth. So I don't want to have too many inputs, right? Like I don't want to be looking at NVIDIA and see, oh, NVIDIA's, that's not, I should have a market pulse set up on this one, but I will. Here, I'll do it real quick just to show you guys. So you come in here. I won't avoid trades. I don't want too many things, too many outputs or inputs in my trading. But these are things you definitely want to keep an eye on. And you can come up with strategies off of this stuff too, obviously. Where's market pulse? Where are we at? Right here. You hit create. So price changes are, especially when a scalp. Or I just filled in NASDAQ longs too. I added, go to volume, pressure, and balance. Open this up. So see how it's on 5 minutes. That's the only thing I change. I make it an hour. Hit play. And then actually I want to see, you can load the historical data. So I'm going to load that up. Like, that's probably too long. About 3 hours. Apply. And then you get this little widget too. It'll start making noise. It gets real annoying if you have a bunch running. So I mute it, and that's all these up here. And then this will populate, and you can see where the big buying and selling is. You can see, come up with strategies off of that too. So the options are limitless. All right, I added this bark and lick. So I just got to hope it blows through here. Remember, I wanted to get out of some, but that was the first move up. Now it did my pattern look, and this is really surprising, by the way. See how it came right back to the exact zone and right back off. Surprise, surprise.
4 spot 515%, 4 spot 515%,
Right, so I'm on
bid to
that.
cover
I'm
ratio
on
2 spot
yes.
63, 2
She's
spot
on 2, I
63.
think.
So the US sells $95
entries. Where's
billion
yours?
in 4-week bills and awards
I haven't
20
filled on
spot
that other one yet.
19%
I'm
of bids
long
at
off of
high.
this. I'll get long off. I'll add to that, and then I can take a long off of that. And remember, I'm watching this area up here that we talked about. So, all right, guys, I'm past the time. Long everything. Be careful. FOMC's coming out. We're going to do a bad time of day too. It could just start whipsawing everybody. And I'm also short gold or crude. All right, so keep an eye on that. It's back to that level that I said to get out of some. I'm going to get out of a couple here. That's the bottom of the market profile composite. Hold on here. Hold on, crude.
Order filled.
And then again, use this stuff to help you, this and Market Pulse, as it gets to these areas. If this is going ape shit, as my grandpa used to say, then you can hold them. If you get silence and no Market Pulse, get out of some. What did I just put on there? Oh, I just added to the ES. So now I got double size longs on. So quickly, again, we already gone over this 10 times. I got long off of that. I just got long off of that, added to it, and if it does it again, I'll add to it again. And watch that level up here. Use Market Pulse. Here's a good example of someone came in here trying to sell this thing. This is what triggered that buy ice, right? So this is great to watch. These sellers were aggressive right here, and they ran into that buy ice, and they were wrong. The price is wrong. Biatch. That's from Happy Gilmore. All right, guys. That's all I got. I do this every day in my trade room. Again, my goal is to teach you guys how to do this for yourselves, not to mirror my trades. But that's what I got on. Have a great weekend.